Where them boys at? Where the boys at? Chat Capital, what's good? Shred Lords and Shred Lordesses, how we doing? How we doing? Oh, we can need a camera on Kenny Finance. You can't be rocking with no camera on Kenny Finance. What we doing here? Chat, what's good? What the heck is up, legends? The lights are on. I fixed some of my overlays. The chat is a little better to read. We added the active sub count. We got Chat Capital AUM at the bottom. We rocking, we rolling. Oh man. Yo, shout out to Smart Money Moves all day. What a Monday. What a Monday. I don't know. Something about the streams this weekend had me fired up, bros. I woke up and I was on straight 10. I was like, I'm bodying everything today. Every meeting, all forms of diligence. I got all types of lawyers and bankers in check today. We got stuff moving. How y'all doing? Happy Monday, y'all. What the chat talking about? What the chat talking about? Ayo Power, how we doing, legend? Edwin the freaking dog. What up, Shred Lords? Edwin's money's up this week. The Android, how the heck we doing? Happy Monday, legend. Oh, Noah, what's up, dog? Noah, welcome. Hey, I just started working in finance. I live in New York City, graduated last year, and I love to connect. Yo, shout out to you, Noah. Congrats, dude. Congrats. That got working in finance. That's right. That got working in finance. Shout out to you, King. Keep crushing it, bro. That's epic, dude. Hey, let's give Noah some career advice. Let's give Noah some career advice. All right. If I was starting back in New York in finance in 2026, what part of finance? What part of finance? Investment banking, asset management, wealth management, trading, risk, anything. What you talking about? What we doing? Richard, what's up, dog? Richard, that dog, the grooming legend. Yo, Richard, you literally, I'm inspired by you every day, bro. You're literally a grooming empire king. Shout out to you, King. Shout out to you, King. Y'all out here getting the bag. I'm an investment operation analyst for a PE firm. Ooh. Hey, W Noah in the chat, y'all. W Noah in the chat. That sounds like a bag, dog. LFG, bro. That's huge, dog. That's huge. Congrats, man. Congrats on that gig. Congrats on the job. Yo, first and foremost, shout out to those that are getting out here and getting it. You know what I'm saying? It ain't easy out here to be doing it like that. So the fact that you're out here getting it and in the space and you're in the mix, that's the most important thing. Y'all like my shirt? Go blue. I went to Michigan, so I got to rep Michigan Mondays. Oh, what if I wear this shirt every Monday? That'd be funny. You want to see how crazy my hair looked? I didn't take my braids out, but I took it was like in like a, oh yeah, we gonna hide the hair. It was in like, it's like super long back here, guys, but I had to take it out of like a braided, it's braided within braids. I had to take it out of braids. What we talking about? Now I'm still sourcing about electronic repairing. Oh yeah, Ayo Power's about to be launching himself a multi-franchise, multi-unit, multi-location electronic and phone repairing empire. So shout out to you. Let's freaking get it. Thank you guys, man. Try my best. Got to get like you, man. Hey, this the community for that, dog. This the community for that. Community full of straight shred lords. That's what we doing out here. And if y'all haven't already, make sure y'all smash that like button on the stream. Smash that like button on the stream. That's what we do, baby. And if you ain't a sub, man, I don't know what you been doing all year. It's a sub up. If y'all ain't been subbing, I don't know what y'all been doing all year. Oh, Noah, back to you, bro. So, if I were to be back on the street for the very first time, honestly, this is what I would do. I would leverage well, first and foremost, I would work my butt off, right? It's called FILO, first in, last out. Showing up first thing in the office, absolutely crushing it, last night of the office. I want you to take note of every single person that you meet and all the meetings and all the diligence and like all the pieces of operation that you touch within the private equity space. Make sure you know who you're meeting, stay in touch with them, figure out who's worthwhile to be mentors for you, and have quarterly check-ins and coffee chats with them. Like if you work and live in New York City, that is the greatest place to network in the entire world if you're in business. It's like the greatest place in the entire world to network. Like every single day, you literally gotta like get up, get after it, and freaking find someone amazing to network with. Heck yeah, everyone's get a journal and start taking notes like a straight demon. Yeah, absolutely. This was a habit that I picked up on during my internships in New York, and it was like super useful. But I used to like wake up in the mornings before work, and I would like check out the news, and then I would see what's happening in the markets, and I would write like a daily journal of like my summary notes of like what happened in the markets. So before I would show up to the desk, I would legit just like have like 3 to 4 bullet points of like what's moving the market, like what matters most. So having that just keeps you very like up to speed on the markets, because in private equity, the number one thing in private equity is people get so bogged down in process that they become dumb when it comes to actual macro and like business fundamentals. Like they're really great at modeling. They're really great at like building presentations, but they don't know that Japan has a snap election and the market's up 3% in Asia overnight. Right? Or like they don't understand that like, yeah, your model is really cool, but the business is literally in a secular decline. Right? Like little things like that. Like you got to be as well-rounded as you possibly can, consume as much as you can. What else? Private equity is a grind health-wise, and you got to stay as healthy and disciplined as you can in New York, man. It's like New York is like that place where like if you're young, you're making money, you got a great job, the natural default is like, all right, I'm going to work super hard. Thursday night, I'm going to happy hour with the boys. Friday night, I'm going on a date. Saturday and Sunday, I got freaking, I got a tailgate watch party at the local Michigan bar. And then you're working 100-hour weeks. You're filling your bellies with, and Nimrod's I don't know if he's in the chat yet, but like Nimrod's will tell you, you got to take care of your body. You got to be extremely healthy. I'm talking a good diet. I'm talking good sleep. I'm talking gym classes on weekends, like taking care of your mental health and like getting therapy if you need it, little things like that, because it's a marathon, not a sprint. So if you really want to be in the game for a minute and like really be good at it, I urge you to really, really, really lock in on the health. And the key is like, think about it, like you want to have some of the best, you want to have like some of the best, you want to have the best capacity to make the most informed investment decisions you possibly can. And even if you're not on the investing team, if you're on the operations side, like you want to have the most mental capacity to add as much value as you can to the organization you're in. That's the number one thing, dude, right? And you can't have mental capacity if you got all this stuff going on, all this crazy, vibrant, super elaborate social life, right? Save your money, spend less than you earn, live modestly, buy some index funds, because I'm pretty sure they don't let you buy direct stocks, but you can do that through Chat Capital. So sub up, like up, and do little things like that. And I think that'll be the way to go. I feel like I'm missing something. What am I missing? Oh, how do I ask questions and network vertically while still validating myself and my skills, being hungry and humble? Oh, Edwin hit us with that absolute semi-scripture, PhD, poor, hungry, and poor, hungry, and determined. What did I say? Did I say driven or determined? I think I said determined. One of those. Both. Driven's good too. PhD. That helped me get my first job on Wall Street, y'all. They're like, so why should we hire you? It's because I got a PhD. Ain't nobody else got one. I'm poor, hungry, determined. Her jaw dropped in the interview. Hey, if I ever get out the game and y'all got to make a documentary about me, I want y'all to name it The Art of the PhD. The Art of the PhD. I'm just a poor kid that never stopped hustling. What y'all talking about? Tenzin, what's good, legend? You freaking spot call degenerate. Boy, you love your spot calls. You got your presentation ready for us? One of these days, you're gonna convince us, Tenzin, to buy some spy calls. You know? I love you though. Noah, does that make sense, dude? Hopefully that's helpful, man. Wow, that makes me reminisce. Who else? Is Boogie in the chat? Where Boogie at? Boogie used to work in New York too. He was my roommate my first year in New York. He'll tell you all about first year Kenny Finance. But if Boogie in the chat, what advice you got for the kids, man? Well, not kids, they're grown men, but young bulls in the corporate era. Of course. That's the name of the game, King. Hey, but congrats to you, bro. For real though. First and foremost, a lot of people don't have jobs. Think about it that way. Well, technically, I don't have a job. So technically, I'm unemployed. Just kidding. I'm self-employed. But like a lot of people like are having a really tough time being employed right now. And it's not like easy. So the fact that you're like an analyst, you graduated and you got a job, that's actually amazing. And anyone that doesn't have a job, keep hustling. And stack the resume, get experience. My friends make fun of me like, oh, bro, all you do is sit around and make content. You're unemployed. I'm like, bro, I work harder than I did when I had a job, twin. We building this stuff. We bootstrapping this stuff, yo. Y'all like the overlays? You guys like the Chat Capital AUM? Wait, do you guys like how the chat is on screen now? A lot better? W for that or what? I gotta find a way. Maybe add like a. I like how it looks, but I maybe want to add like a background behind it. W overlays. So Chat Capital. This is how much we got in AUM overall, guys. $356. We're gonna get this up. We're gonna get this out to a big bag. Yeah, definitely a blessing. A few of my buddies smarter than me still don't have jobs. Very blessed. Yeah, man, you gotta stay blessed, bro. Gotta stay blessed. Y'all, we got a lot of stuff we want to talk about. Like, there's like a lot of stuff to talk about, guys. There's like so much going on. I don't know if you guys know, but like Japan markets up 3% overnight because of these snap elections. Tenzin, what's the play? What's the play on the spy calls with snap elections in Japan? So we're gonna look into that and try to learn about that. And that's what's good, guys. Is like when you're investing and you take the time to actually like learn about what's happening in all different kinds of markets, it helps you sort of understand patterns and things that could like impact U.S. businesses, U.S. markets. there's like this really crazy consumer thing that came out today. The Trump administration like wants to set a limit on credit card debt, like temporarily. Like they want to have credit card debt just be stuck at 10% or like interest rates at 10%. And that's like, that is so bad for credit card companies. You know, it's like so bad at credit card companies. Um, and then we need to figure out like we need to make a list of the platforms that we want to use for chat capital. 10%, yeah. For Lauren, what's good, dude? Yeah. And Edwin, that was like my logical thinking, bro. Is like short Visa, Discovery. I don't know what MasterCard is. Or like Amex, like little things like that. It's like these are, I don't know if they're all public. Some of them are private, probably. But like, that's really bad. It's like how do these things make money, right? The way how these platforms make money is literally through freaking literally through interest rates on consumer debt. And if you set a cap at 10%, if you set a cap at 10%, this is what I think logically is going to happen. Number one, you're going to have less approval rates, meaning that access to credit is going to diminish significantly, right? Because like they're not going to lend to anyone that has even a chance of them like, you know, defaulting or something. And then secondly, all these fancy credit card rewards, they're about to be evaporated. Say goodbye to the Amex travel portal. Say goodbye to the Chase Ultimate Rewards. Say goodbye to all that, because like the bank, like these companies aren't going to be making any money at all on this. They're going to be like, screw it. So, but we should learn about what's happening. Let's get smarter on it. Let's get smarter on it. What else we got going on? What else we got to focus on, chat? If you guys want a little bit of insight, what's happening in the world of the private deals, we are working through, this is very boring, we are working through a F reorganization for a business we're acquiring. And if anybody wants to know about an F reorganization, it allows for you to go through acquiring a business and like subtly change the freaking entity of the business you're acquiring so that you don't assume the prior liabilities because you transition it from being a stock purchase to a stock purchase of the new F reorg. All kinds of things. Boom. Well, maybe I don't want to bore you guys with that. Ham ATL, what up, dog? ATL Jacob. Rich Topic, what up, twin? Market Mondays. Hey, y'all, there's money to be made. I don't know. My fingers, I literally have that little itch in my palm, and it's telling me that there's money to be made in the markets. Somehow, somewhere, there is a play. And I think Hamilton's got that play for us. W Hamilton. W Hams. Do you think that it will help consumers that default on their payments long enough? Yeah. So, a good question, Hammy. I think net is gonna help impact. It's gonna help improve the interest burden of existing borrowers that have debt that would have historically been like 30 to 50% plus. That is gonna have that cap at 10%, right? But I think for net new borrowers, I think it's gonna hurt them. Because I think it's gonna like the filter of like accessing credit. I think it's gonna get really hard. Like anyone in the mom can get a credit card right now, and you can spend whatever you want, and like that. I think that's like a play that I think is gonna be pretty difficult. The Stoner brand, True Religion. Thank you for subscribing. That is an amazing name. Olivia Godet, welcome to the fam. Thank you for subbing. Welcome, 2 new Shredlords. What's up, guys? But yeah, but I think it's like now it's going to be a situation where it's going to be almost not impossible, but it's going to be like really, 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 really difficult to get access to like cheap credit. But I think it's also going to introduce a lot more payday lenders. Or think about it this way, like most of like the super high interest rates, and I want to keep it non-political, but like most of the super high interest rates actually are impacting like disadvantaged or less financially literate populations. And that just tends to be naturally, if you look at the US economy and US population, tends to be like lower income or diverse populations that just don't have strong enough historical exposure to smart money habits, right? Just naturally. Black, Hispanic populations, low income people, even white people as well. People that are just like low income that don't know how to use money, they're typically targeted for like these super high interest rate things. They spend stuff on credit cards, they don't actually pay it off, and they get hit with these 30, 40, 50% credit card interest rates. And then they just go into a vicious debt cycle. It's really freaking bad. This 10% rule, I think, will help their current debt outstanding. But I think it will then like also prevent them, since the credit card companies need to make money, it'll prevent like that population from getting access to anything that's like institutionally good from like a Chase, a Amex, etc. So where I think it leaves them to where if they still need access to credit, they're going to be marketed by all these different buy now, pay laters, payday loans, all types of things that are like, hey, Chase won't lend to you. We will. Boom, boom, boom. At like some crazy wild rate, or taking pieces of their paycheck, little things like that. So I think it's going to be like a wild, wild setup for consumer lending. Rich topic. Whoa, did we get some more capital for chat capital? No, so like that's our donations, but it's also the likes that we got on the last two videos. And I made a promise of the last two videos that like all the likes that we get on those videos, which are kind of like excerpts from our live streams, that was going to be, I was going to put that personally into chat capital. So we got almost 100 plus likes on those vids. So I added those to the chat capital AUM. But we're keeping things moving. We're trying to deploy. Oh, Edwin, you said Chevron. I forgot your question up earlier. So on Chevron being the NVIDIA of the oil sector, how about we look into this together? Let's research together, y'all, shall we? Because I'm not the smartest on oil and gas. I'm trying to get smarter. Oh, and then Noah SPG. What's SPG? Is that the parking one? Is that the parking one? SPG. Oh, no. That's Simon Property Group. Simon Property. They own the malls. Let's hear about Simon Property Group, y'all. What they talking about? Oh, real estate investment trust. All right. We're going to tackle these questions one by one. How does this overly look? Wow, that's a lot of things in the chat. That's a lot of... Chevron's great. What they got going on? What's happening with Chevron? I feel like y'all know something that I don't know. It's just me, myself, and I. Long-term dividends. All right. Simon Property Group. Y'all know what I like to do. When I'm looking at a stock, have y'all realized that my typing has become incredibly more efficient and better after playing the typing game? W typing game, y'all. Maybe we should play. Well, fun enough, I realized that you can do it with a team. You can do matchmaking. So maybe if someone wants to hop on a game with me, we can play it together. But, all right, for investors, stock information, press releases. No, not press release. Stock info. Financials. Where's the presentations at? I want to see what they're talking about. Stockholder events. Archive thing. This is weird. They don't give us the actual thing now. Anyway, let's get it out the mud with this. If you want to know about a business, what's happening with a business, take your butt to their annual reports, guys. Take your butt to their annual reports. Okay, so, dear fellow shareholders, Associated delivered record-breaking year. We achieved record highs in total rev, domestic property, NOI. NOI is a really, really, really important metric when it comes to real estate investors. All right, that's kind of like what is the EBITDA equivalent in the real estate world. After you pay like all the expenses and little things like that, other properties. Funds from operations, dividends, leasing volumes, and retail sales have done well. We recently hosted our national conference in our hometown of Indiana, where our field management associates. Okay. All right, here we go. Let's read what's happening here. The central theme of our conference, now, new, next, perfectly captures our mindset. All right, bro, get to the gist. Okay, let me see the numbers. Here we go. Now let's turn to profitability. We evaluate all investment opportunities. First of all, do you guys go to malls? How do you guys think about this? Do you guys go to malls? Here, I'm gonna start a poll. Because this is a really good question. Do you shop in person? Or do you? Because this is going to give me really good visibility into the investment thesis that we're going to build here. Do you guys shop at malls? Yes or no? Yes or no? What are we doing here? Yeah, right? Like, it seems quite odd. You know what I'm saying? I totally agree with you. It just seems kind of odd. But to be fair, though, the stock is not up that much. You know what I'm saying? 6%. When some of our memory stocks we've been looking at were up like freaking 800%. All right. So what they're saying is we evaluate all investment opportunities through a rigorous profitability lens with a focus on long-term value creation. Okay. Boom, boom, boom. Over the past 4 years, their funds from operations paid to shareholders has grown at a compounded rate of 9% and 8%. With that backdrop, let's turn to 24 highlights. We posted record sector-leading financial results. Consolidated revenue increased 5%. Net income was up $2.4 billion. $5 billion. Real estate. Property grew. Boom. Our share of portfolio NOI, including international properties on a constant basis. Occupancy of our U.S. malls and premium outlets increased 70 bips and ended the year at occupancy was at a 97%. What the heck? Dang. You guys know what occupancy are? Occupancy is like if you have 10 available retail stores in your mall, that means that like 9.5 of them were leased out. So like this is really, really interesting. Opening some new developments in Tulsa. Continue to carefully assess new developments. What do you guys think? You think it's a W? Low key, this might be it, guys. No, not really. I'm not really super excited about it, but it's like I think people are shopping. You know? I think people are really shopping. Granted, it's like the bet isn't are people like actually buying things in stores, right? It's kind of like, are they just attending? Are they going? You know? Marketing has been good. We're not really like mall investors. Well, I'm not. But this is actually really good intel to read, guys, by the way. If anyone's like interested in like understanding what's happening in the world of like real estate and premium outlets, this is a really good, healthy read. And they have quarterly stuff like this all the time. This is good. But the thing is like they're coming off of like a super low COVID. You know what I mean? Like what happened in COVID? Essentially, we're just back to almost pre-COVID levels, right? To where, all right, still, even pre-COVID to 2016 all the way to 2020, retail enthusiasm still dropped 30%. And then COVID hit and it fell freaking 65%. And then it's just been ripping back all the way to like COVID. Yeah, I mean, it's granted, we got to keep in mind, like, there's a whole different psychology of human that is still obsessed with malls across all socioeconomic statuses, right? Like, I think malls still have such a powerful psychological magnet to people that, like, folks are still getting outside and, like, going and connecting. I think what we're seeing now is, like, people have, like, kind of been not like people have been like so fatigued by being indoors 2020 2021 that's just like at any moment's notice to get up, get outside, go somewhere, socialize, fly somewhere. It's just, I think people jump on that opportunity. You know what I'm saying? And plus, it's like markets are great, economy is good. It's like people got dollars. And plus, it's like for dudes, rich topic, you said it right on. Malls where the baddies be at. So you got to go. Right? It's like, I don't know about y'all, but it's just like sometimes you got to put a fit on. You know what I'm saying? Put a fit on and pull up to them, you know? Go to the malls. Malls and in-person shopping is still the main revenue channel for clothing brands compared to online, at least for mature brands. Shout out to Hammy for these expert intel. That's a really good point, though. Oh, but I don't know if this is a... Wait, are you are you pitching this for Chat Capital? I don't know if you want to pitch this. We got better opportunities. Wait, wait. We got to pitch some stuff. Oh, you know what's crazy? You guys literally gave up. You guys literally were like, you guys told Boogie no this weekend. And it's already up 9%. Boogie pitched the stock, and you guys absolutely crapped on it. It was like an 80% pass on his pitch. And Boogie's stock is already up 9%, y'all. Hey, y'all owe Boogie an apology. He's our largest shareholder. I'm kidding. Oh, Edwin, for the record, I said yes. I feel you. All right, so that was a good one. Good question. But Edwin, I got to get smart on Chevron. So what's the play on Chevron? Let me see. Yeah, Edwin's a real one. He's still bio. Edwin literally is a real one. All right, let's I got to get up to speed really fast on Chevron. So we're going to use AI for this. Hey, chat. I need to get up to speed on the latest investment thesis on Chevron. I want you to dig through their latest investor presentations, quarterly and annual earnings, and give me a summary of what's happening with the stock and what the latest bet needle moving question is in 1Q. Oops. 26. Let's see what AI is talking about. Hey, chat. Okay. All right. Okay. So Chevron is focusing on capital discipline and this is so fun, by the way, guys. I literally do this all freaking night. I love this stuff. This is so sick. I'm glad you guys are doing this with me. W guys. Hey, Devons. How you doing, legend? Chevron is focusing on capital discipline and high return projects to drive significant free cash flow in 2026. With a needle moving question in 2026 being upside from its operation. Ooh, it's got operations in Venezuela. Oh, snap. I knew something was going on. All right, Chevron's investment thesis centers on leveraging completed major projects and the acquisition of Hess to boost cash flow and shareholder returns. Okay, because oil prices are still volatile. Ooh, hold on. We gotta see what happened in crude oil prices. This don't make no sense. Okay, so oil prices kind of suck, right? But Chevron has been relatively flat, but it seems as if they've done a good job of increasing overall cash flow and margin stability by acquiring businesses like Hess Corporation and trying to mitigate and diversify their operations from just like the overall Oil environment. Okay. All right. That makes sense. The company emphasizes capital and cost discipline with 2026 capex budget set at a low end of its long-term guidance. All right. They're not going to be building as much to achieve $3 to $4 billion in structural reductions. Interesting. The Don also said he's not happy with Chevron. It's going to take a while with how the oil is going. But what's Edwin, what's your play? What's like your one-line thesis? You think it's going to go up or down because of what? What's like your one-line thesis? The big question facing Chevron stock in 2026 is the potential upside from its unique position in Venezuela and the potential easing of U.S. sanctions. So the opportunity. Chevron is the only major U.S. oil company with continuous operations in Venezuela through joint ventures with state-owned PDVSA. Oh, that's important. That's important, y'all. Analysts estimate that a ramp up in Venezuela crude exports could unlock an additional $400 to $700 million in annual cash flow. Ooh. The pace and scale at which the potential can be converted into sustained growth remain highly speculative. The political situation, the U.S. sanctions, and the time required to build the country's oil infrastructure all introduce a layer of risk. Okay. All right. I think essentially a big bet here is that, like, if we ignore Venezuela, the business kind of sucks. Not sucks. It's just that, like, they're like oil is just been like in a secular decline in terms of crude prices. But what they've been sort of like managing and able to do is just either like restore operations, reallocate capex to maybe higher returning capital expenditures and projects and developments, and also kind of just like acquire their way to like cash flow margins and yield for their investors. Because if their core businesses can't do it, go acquire something else that can, right? Either better operations, better positioning, better logistics, like whatever they can to like shore up the free cash flow profile of the business. Now, it seems as if they got like a lucky free pass go get $200 by just like their stagnant Venezuela operations. Now it's coming into spotlight. And with the U.S. involvement, it likely seems as if like these sanctions isn't really going to be a problem now that U.S. is heavily involved now in U.S. and Venezuela state oil programs. And they're the largest producer there. And it seems as if they're going to like ball out with this pretty low cost basis and uptick in production. But they do need to do a lot of development down there to like have the actual oil infrastructure to be as good as it is in the U.S., I think. Okay, so I just built a thesis right there. Does that make sense? What do you guys think? I think with that in mind, I think it's like a 2 to 3 year bet though. I don't think it's like a near term thing. I think it's gonna take a while for all this to really like kick off. I think it's gonna take a while. You know what I'm saying? What do y'all think? Y'all just seeing me nerd out on stocks. Let's see what kind of press releases. Delivering strong results. Oh, 10 years or more? Yeah. I think so. It's better to just watch from the stands for now. Yeah, I agree with you. But we should add it to our calendar though, guys, that because they're probably going to give us so much intel around what's happening with their Venezuela operations. We should actually listen in on this conference call. I think so. Do you think we should listen on this conference call? Should we add it to our calendar? Hold on, I'm gonna add it to our stream calendar, guys. I'm gonna add it to our stream calendar on my phone, so we do it together. What is it? Chevron earnings, because the earnings we have now are mostly like tech earnings. It's mainly all like tech earnings, guys. Chevron earnings. I'm supposed to go to the gym tonight too, get a workout in, y'all. Trying to get the body right. Okay, this is Chevron earnings. What date? It's January 30th. It's in 3 weeks, y'all. So, boom. Me and Edwin carrying the chat. Hey, that's what it's here for. The chat is for you guys to have investment theses, support each other, for everyone to be nice, have amazing ideas, and for us all to learn. but we got some yappers in here every now and then. But no, I love it. I love the energy. I love the energy. Yeah, so if you can join Edwin, I'm gonna listen to it on at but it's, oh my gosh, it's like 11 a.m. Eastern time. That's 8 a.m. my time. Screw it. Maybe an early stream that day. Early stream. I'm down. I'm down with the boys. Quick little early stream. All right. Isn't this cool though? That like you can literally go on now Gemini and just type in this thesis like this and get things rolling. Let's do another one. Here we go. So Trump announced today that he is looking to set a 10% cap on credit card interest rates for consumers. I assume this has negative implications on walk me through the economic implications as well as the second and third and fourth level investment on right? Because in investing, Howard Marks is one of the greatest investors of all time. He always says that you need to start having second and third level thinking, right? When you see something, oh, whoa, hold on, Gemini, what you doing? What you talking about? Howard Marks says, here, let me show you guys Howard Marks. That's what he looks like, by the way. Absolute legend. One of the biggest shred lords in the game, y'all. If you guys want to become smart investors, you need to be reading his Howard Marks insights every single time they come out. Like his stuff is so freaking good. Warren Buffett said whenever his email gets a Howard Marks memo, that's the first thing he reads. But like he's been writing this literally for like 50 years, every quarter or something. And he just writes his perspectives and thoughts on the markets. He's known as the greatest credit investor of all time. Warren Buffett's the best equity investor. He's like the best credit investor of all time. And I got some friends that work at Oaktree and they're straight dogs. It's so impressive. But one of his key lessons is like having second and third level thinking, to where like when you see an investment thesis, like don't just take high level announcements, themes, and then just bet on that. Think about the second, the third, the fourth level derivatives of that investment theme. Like let's take for example, let's go full strength for this. Let's say for example, AI, right? A high level investment theme says, okay, the world is consuming more AI. We need to invest in chips. So folks, or we need to invest in GPUs. So folks are like, oh, let's buy NVIDIA. That is Stormy's number one stock. If anyone sees Stormy in the chat, tell them, say, hey, but Stormy is obsessed with NVIDIA. And we're going to get like a few dollars worth of exposure to it just for Stormy. But that's a first level thinking. We want to think second, third, and fourth level, right? Second, third, and fourth level is like, all right, if AI is continuing to boom and we need more GPUs, the second level is kind of like, what are the other pieces that are critical towards enabling the AI infrastructure? GPUs is just one picks and shovel within that space, but what else does there exist? There exist data centers, there exists a power infrastructure, there exists a memory, there exists storage, there exists cooling, like Edwin said, little things like that. That's a second level thesis, right? Let me tell you guys a third and fourth level thesis. This is where you get funky with it. The world of AI is taking off. We need a bunch of data centers. Within the data centers, the things get hot because people are running this literally all the time. We then need to have cooling solutions. Within the cooling solutions, you need to actually have the hardware cooling tech for the GPUs, but you also might need to have a better and improved HVAC system for this as well. Now, once you have the better improved HVAC system, we actually also need the service techs within that space that specialize in data center cooling. Then we realized that there is a huge talent bottleneck in the US because there is not enough folks that are specialized in HVAC, that is specialized in cooling for data centers. So the best underlying fourth and fifth level thesis is that we need to actually be buying trade schools that are focused on programming for data center cooling HVAC techs. You see? Stick to your business model. Crazy application, little things like that, right? Like that's how you get like third, fourth, fifth level thing. Like that's my goal with all this, is just to showcase that like there's so many levels of just like coming up with investment themes and ideas just to get folks like locked the heck in. You know what I'm saying? W thesis or no? Hey, Open Mind, how you doing? How do I start business acquisitions and buying businesses? Do I have to save a lot of money? That was Go Nuggets. Yeah, thanks, Edwin. I appreciate that. How do I start business acquisitions and buying businesses? There's a really great guy on YouTube. His name is Kenny Finito Finance. Check him out and watch every single video that he's put out there that's focused on business acquisition. And he's also got a free ebook on his website. And a lot of good useful stuff there. And then get a bunch of reps. The best thing you can do is check out reps and look at businesses every single day until you find one that you strike, and then do some diligence, hop in the chat. We'll talk about it and keep it moving. Welcome, Open Mind. Okay. So, but that is Howard Marks. So I want to figure out with this credit card thing, right? I want to understand what is happening here. Because if you guys don't know what's happening here, let me, should we film a YouTube segment on this? Wait, we should film a YouTube segment, right? For our second channel. Let's do a, hold on, guys. Let me get this prep. We're gonna prep this. All right, everybody spam hi YouTube in the chat. Everybody spam hi YouTube in the chat. We're gonna film a 5-second segment. It's gonna literally like 3 to 5 minutes. We're gonna talk about the implications of the credit card interest rates and what they mean for your money. Sup, YouTube? All right, YouTube. Today we are talking about what is happening in the world of credit cards and Trump's implied 10% cap on interest rates. This is revolutionary and potentially mind-blowing for two people. Number one, consumers that have been borrowing a bunch of dollars and bunch of credit card debt just to buy things. But then two, actual, oh, my Streamlabs bot. I gotta turn the Streamlabs bot off. It keeps banning people. Let me see. Oh, it's all because you did all caps. Sorry, Edwin. Or sorry, no. Anyway, but we got to talk about this and what's happening with this 10% interest rate conversation for credit card companies. This is pretty needle moving because, as you can imagine, credit card companies make their money in one simple way. They charge consumers interest on whatever they borrow if they don't pay it ahead of time or pay the full statement. So as you can see, they're used to charging 20, 30, sometimes 40% plus interest rates for consumer debt. But if there's a cap at 10%, things can go incredibly wrong for some of these credit card companies. So let's try to get a sense of what is actually happening. All right, so the key points here. President Trump called for a 10% cap on credit card interest rates, but did not provide details. But this is what's actually very interesting. Around 61% of credit card holders were sitting in credit card debt, and that jumped up from 53%. So we went from 53% people holding credit card debt to 61%. So as you can see that like overall US consumer borrowing is getting a little bit more of a worrisome environment. Now, this is going to be my decision, in my opinion, game changer for credit card borrowers, because now it's like if you have a lot of debt outstanding, this is going to slash your debt literally in half or by a third. But this is the big thesis here. The big thesis here is I think that credit card companies, Chase, Visa, Amex, they're going to start to realize that if I'm not allowed to charge, if there's a ceiling to the actual interest rates that I can charge on my credit cards, I am going to ensure that I shore up the rest of my P&L. And think about the P&L of a credit card company. P&L of a credit card company, a lot of their revenue is, of course, from the interest rates. But what are some of their costs? A lot of their costs are actually charge-offs. And if anyone knows what a charge-off is when you have debt outstanding that you're not going to receive, so you essentially just like forget about it, right? They're going to try to remove as many charge-offs as possible. And in order to do that, you need to tighten your credit standards. In order to do that, you need to tighten the filter of which you allow people to be accepted into your borrowing ecosystem. So if there was like an acceptance rate of 30% today, with these high interest rates because they can kind of make their money on the back end. Now you're going to see tightening of those approval rates to maybe 15, 10, 5%, right? It's just going to be incredibly difficult for borrowers to get access to credit. That's the first big implication. Now, the next thing is all of these rewards that they have. Like, it costs money to sit in an Amex lounge. It costs money to have all of these like Amex perks. This stuff is like quite expensive. And if the overall P&L of a Visa is being tightened because of how much they can charge on the revenue, this might just get a little difficult, guys. So what you're going to see is you're likely going to see a reduction in the quality or abundance of a lot of these credit card rewards. So as you can see it, I'm a credit card, guru. I love Chase Ultimate Rewards. I love my Amex points and all that stuff. But it's like, now I'm thinking about, do I just need to use all this stuff ASAP and like get as much as I can out of my benefits before they start to be crappy and people pull back on what they're spending on the benefits? It's just a logical thing that's going to happen. But this is where I want to spend a little bit of time thinking about our good friend Howard Marks. Because when you think about the investment themes, of course, what I mentioned is like the first level thesis. But you want to, our AI doesn't even work. Let's see. Let's see if this works, guys. Oh. Something went wrong. Research wasn't generated. Maybe it's like brand new. Let's try this. EcoSurge. Boom, boom, boom. Here we go. Let's try this. Oh. Maybe this is like brand new. So I wanted to ask AI, like, what is like the second and third level thesis around this? Right? But in my opinion, what you're going to start seeing is private credit involvement in the consumer credit ecosystem dwindle as well. Like, that's what I wanted to show. Like, what I wanted to show is that overall, the second and third level thesis is typically when there's always a borrower within the borrower, within the borrower, within the borrower, right? I have a credit card. I'm borrowing on that credit card. I have debt outstanding. That debt outstanding, that balance is actually bundled up into some other package that is then sold to a different investor. And that investor has a bunch of other pieces of credit and it's bundled up and sold to a different one. So what actually the implications of that is that like you start to see like each stack or domino of like the credit ecosystem and space start to dwindle less and less and less. Now, as you can imagine, if the spreads on those things are like quite high, meaning interest rates are pretty high and you can charge a bunch and your costs are pretty low, like that available buffer or profitability per credit stack is super high, then you're going to realize that like the other folks in that supply chain are no longer going to be eating as much as everyone else. So that's where it gets like pretty worrisome, is that like in the private credit world, you're going to see like heightened tightening of a bunch of these things here. Maybe let's ask ChatGPT, see if that works. Let's see what they say. Oh wait, let's actually clarify it. Think like Howard Marks. And give me the second. Yeah, let's get deep into like the overall stuff. All right. Like, you can use AI to your advantage to just be such smart investors. This is like really impressive. Okay, so this is what's going to happen immediately. Number one, credit card economics get blown up. This is like so buns. 10% cap when they're usually charging 21 to 24 and 30% plus even on subprimes. That is like an overhaul to an entire business model. Now, next, issuer. Who actually earns the interest? Banks, JP Morgan, Bank of America, Citibank, Capital One, Discover, and Amex issuer in the network. Who mostly doesn't? Visa, MasterCard. So the knee-jerk reaction, Visa and MasterCard are screwed, is actually wrong. Oh, fascinating. Okay. Immediate losers: Capital One, Discovery, Synchrony, and store branded cards, and subprime lenders. Less impacted: banks with diversified balance sheets, and these types have indirect exposure. Okay. Second order effects: credit availability collapses, lower credit limits, fewer approvals, like we said, higher FICO cutoffs, forced migration to risk borrowers out of cards. That makes a lot of sense. Boom, boom. Number 4, Amex becomes structurally weaker than Visa and MasterCard. Amex earns interchange fees, annual fees, and interest income. Under cap, Amex loses interest income, still bear credit risk, and can't offset with customer churn. Visa, MasterCard, no balance sheet risk, still collect fees per transaction. There we go. Boom. Merchant economics subtly worsen. If issuers can't monetize, they push harder on interchange negotiations, reduce rewards, we talked about that, shift costs back to merchants. You can expect reward devaluations, so use all your points where you can, gents, less consumer spend velocity, and higher merchant discount tension. Third order effects: consumer credit risk migrates, not disappears. This is what I was talking about. Consumers actually, they're not going to stop using credit. They're just going to find it from somewhere else. So as you can see, buy now, pay later, installment loans, payday lenders, private credit, auto loan, these are going to be alternatives that are going to start juicing up the marketing as much as they can on these kind of products to say, hey, I know your traditional card issuers aren't going to give you the available credit anymore, but guess what? We are here to save the day. Now, buy now and installments wins, then they get regulated. Yep, this is likely going to happen. People are going to go into this, but then these things are actually really bad because they can work around the fee things and the interest things because they actually don't charge high interest rates for these buy now, pay later products, but instead they charge fees that if you add the fees up relative to the borrowing base, it's actually pretty high, significantly high borrowing expense. Private credit quietly becomes systematically important. Banks pull back from subprime revolvers, private credits, funds step in, higher interest rates justified as non-revolving. Okay, this is getting into the advanced private credit stuff. This is 2009. All right, what's the next layer? ABS, CLOs, and CDS get repriced violently. So credit card ABS relies on excess spread, which we talked about, revolving interest income, stable payment behavior. APR caps shrink excess spread, so no one makes as much money, and reduces the tranche protection. Expect wider spreads on credit card ABS, downgrades on mezzanine tranches, CDS spreads widen on consumer lenders, hedge funds short consumer credit indices. Boom. That's when the hedge funds come into play. You see how all this, look at all these theses. This stuff is deep. First of all, ChatGPT is a genius. I like this. But this is where Oaktree and other credit-oriented hedge funds are going to play. All right. Anyway, this just shows that if this actually ends up happening, the credit world, especially consumer-oriented credit world, is low-key kind of screwed. Right? This is a fascinating second, third, fourth, and fifth level thesis of what's going to happen. Moral of the story is pay your credit cards off on time. If you have credit card points, consider using them because they might be significantly devalued if this actually comes into play. And if you are a private credit or a hedge fund guru, you might want to take a look at shorting the consumer credit ABS stack. All right. So that was the really fun kind of advanced YouTube segment of us talking about credit. I don't know if I'll actually post that. Maybe not, but because it's it's very in the weeds, and these credit card companies will not like me saying this, and we may want to get them to sponsor us on something. People do need to understand how to use credit cards. They really do, guys. It's actually worrisome how they don't understand it. There is something happening in Japan that I want to talk about really quickly. If anyone is anyone familiar with Japan? That was a good one? Oh, thanks, Evan. So if you don't know about what's happening in Japan, there is a snap election happening right now. Now, what's the actual underlying views and candidates and historical implications and economic history? I got no freaking clue. That's what I want to learn together on stream. But right now, the Japan stock index is up 3%. And like 3% jumps in overall market indices is like pretty significant. So, and I think there's going to be like a lot of implications of like what it means for US market, businesses that have Japanese operations and little things like that. So I wanted to pull out our handy dandy Gemini or Google Finance to help us understand what is happening with Japan. Or does anyone on chat know? Can someone explain it to me? What's happening with Japan? Consider me like a literal freshman in college trying to understand what's happening in Japanese economics. Give me a summary of what's happening in Japan economy and over the last 5 years and their let's see what they got going on. Come on, Gemini. We're learning so much. Do you guys know how long, like 10 years ago, it took to like understand all this stuff, all the research you needed to do, all this other jazz? Like, there's so much you had to do to get up to speed on things, and we literally just typed in a prompt, and I'm about to learn this stuff right now. Okay, so Japan's economy over the last 5 years has been marked by modest growth, deflationary pressures, and structural issues like aging population. There is an aging population. Do you also know that there's like a declining birth rate? And I don't know if it's, I think Japan and Korea, there's declining birth rates, y'all. Like, people aren't having babies in Asia. Isn't that wild? That's crazy work, right? Like, let me show y'all. You see this? Japan's annual births fall to record low as population emergency deepens. This is wild. This is such a stark picture. Why they gotta put it like that? That's just so dark. Empty, like abandoned. Well, it is an abandoned school. Dang, this school was abandoned and closed because of Japan's birth rate decline. That's wild work. That's crazy work. And I've been to Japan too. Japan low-key is nice. Hi, Zestiny. Happy Market Mondays. Nobody is having kids anywhere, including here in the States. China. Wait, actually here in the United States? Are you serious? U.S. birth rate. I think it's because of, is the U.S. birth rate? Record lows. Oh my goodness. Hey, y'all. Are humans shocked? Are humans shocked? But actually, though, when it comes to Japan, though, guys, this is where it actually gets interesting. Like, I learned that in Japan, not like the US, but in Japan, it is literally in the last like 3 to 5 years, not 3 to 5 years, like 5 to 10 years, that they started to open up participation in the work culture and like corporate world to women. So like the actual participation of women in the workforce is not like something that's like 50, 100 years old. Like it's a relatively recent thing. So what you're starting to see is a ramp up in the participation of women in Japan working and realizing that like their role in society is no longer like super, you know, dependent just on homemaking. Now they have this entirely new, amazing opportunity to get out into the workforce and like build a career for themselves, build a brand for themselves, right? So as you can imagine, like if I'm a woman in Japan, that's amazing. I have this whole world of opportunity opened up to me that's only been open for like 10 to 20 years. Versus guys have been able to work for like forever, right? So a lot of women are becoming more busy and I guess like less willing to entertain, you know, marriage and bearing children just for the sake of making a family, right? So I think it's just like there's an entirely new algebra of the decision tree for women in Japan. Destiny says it won't matter anyway, to be honest. In 20 years, robots will be a big part of the workforce. You are right about that. I don't know if you checked out my CES streams, but we looked at a lot of robots. We looked at a bunch of robots, y'all. But this is actually like so it's just like wow to think about that. It's like, yeah, it's like it's a natural, like logical story of just like people participating in the workforce and less work. But then it's like, all right, that's leading to like actual birth rates of like whole populations collapsing, you know? Like it's like pretty interesting, you know? Um, anyway, but let's understand what is happening in Japan's market. So more recently, the economy has been influenced by weak yen, rising inflation, and government stimulus measures. All right, GDP growth has been subpar. Modest growth in 2026. Core inflation has been above 2%, driven part by depreciating yen and higher import costs. Despite a tight labor market and high corporate profits, real wages have contracted due to inflation. I actually heard on TikTok that like a lot of people are kind of like, hey, foreigners coming to Japan just realize that like we don't make that much money locally, so be respectful and stuff like that, and spend money on tourism and all that. So, like I think in country Japanese wages, even for corporate and non-corporate jobs, is like still pretty subpar. And inflation is pretty crazy there. Monetary policy. The Bank of Japan has maintained an ultra loose monetary policy for much of this period, keeping interest rates low, though it has begun a gradual process of normalization and expected to continue rate hikes. All right. Has carried high level of debts. That's the, okay. So the snap elections, what are they talking about? So Prime Minister Sanae Takaichi is reportedly considering dissolving the House of Representatives for a snap general election as early as February 2026 to capitalize on her strong personal approval ratings. So she's like the fan favorite. The current ruling coalition holds a slim majority, and an election victory would provide Takaichi with a stronger mandate to push through her expansionary fiscal policies. Okay, so she's pro like expansion. All right. The speculation is already influencing the global market, leading to a Takaichi trade. Okay. So like if this person is successful at dissolving the House of Reps, and she's able to push through some of her expansionary fiscal policies, I think it is broadly overall good for Japan's economy and global markets. That's my current thinking of this thesis so far, guys. Implications include weaker yen, the possibility of continued aggressive fiscal spending, and a slow pace of BOA rate high increases cause the yen to weaken, reaching a one-year low against the US dollars, aka incredible time to go to Japan, because your dollars will go a long way for US folks. Higher equities. Japanese stock indices such as Nikkei will have hit all-time highs on the news as a weaker yen. Boom. Okay, so that's the thesis. That's the play. That's what really matters here. So what we're realizing is if we have, what's her name? I forgot her name already. What's her name? Taike? If we have the Taikachi trade, let me stop being rude. Taikachi trade actually work out, this could be a pretty awesome setup. And I think there's money to be made in Japan. So here's the second and third level thesis. If that's what's happening macro-wise, and they're investing a lot of like stimulus dollars into boosting the economy, the yen's gonna weaken. All right, that's the first thing. And if you're personally want to travel, you can have a pretty great vacation out there in Japan. The second thing, though, is to think through like what are the underlying Japanese-centric supply chains that are going to be doing incredibly well because of the government stimulus and trying to attract more economic activity in those regions. And I think there is a lot in the automotive space in Japan. There's also a lot going on in semiconductors in Japan. So you got to look through those particular segments. And I think that'll be a pretty solid setup. So a play that we can do that's a little bit more diversified is to find a Japanese tech ETF or a semiconductor ETF, or Japanese autos is just kind of like a weird place to invest. But like Japanese tech or semiconductor ETF could work. Oh, what are the? Oh, great question, Edwin. What is Japan's top exports right now? Here we go. I'm gonna see like what are they exporting and what's a good thesis for the AI boom. Okay, so there's this. Oh yeah. So mainly transportation, heavy machinery, electrical machinery, and then chemicals, cars, circuits, and motor vehicle parts and accessories. But this is good. Integrated circuits. That's really good. Okay. Key strategies for investing: computing power such as GPUs made by NVIDIA, semiconductors, AMD. So like some of these folks have Japanese operations. We can take a look at that. Investing in established tech giants. Okay. AI software. Okay. This is good data. This is good details. So what are our thoughts? Are we bullish? Are we bullish on Japan, y'all? What's Japan Tech ETF? Oh, manga. Heck yeah, we haven't even talked about manga yet. I gotta find a way to invest in that. You know how good Jujutsu Kaisen's about to be with these federal stimuluses from the Taikaichi trade? All right. You know how amazing the next season of freaking Vinland Saga is gonna be when the Prime Minister of Japan starts to invest in the actual economy. It's about to be crazy, y'all. All right. Let's find some Japan Tech ETFs. W Naruto. Wait, do you guys know that I've actually never seen Naruto? Wait, no, that's a lie. I watched maybe like 1 or 2 seasons of Naruto, but I haven't. Yeah. I was thinking like, what? I did play the Naruto games though, guys. I did play the Naruto games. So I played like the Naruto games on Xbox when I was a kid, but I don't think I sat and watched like the whole thing start to finish. Anyway, like, I think I maybe watched like the first season. But there's so many things. There's like Naruto's got a kid now, and there's like a kid series and all that. W Shibuya arc. What are you talking about? Jujutsu Kaisen? Chris, how you doing? Welcome to the chat. Chris Balaram. Sorry, my let me see. It says, from your experience, how does a weak yen actually flow through a PE model for a US sponsor investing in Japan? Like, where does it help and where does it create hidden risk? So, in my opinion, I think it is useful for a PE sponsor investing in Japan if you are like things that are incredibly capital intensive. Like it's kind of like very simple to think about it this way, but like yeah, I'll explain it like very simply. If you go travel to Japan right now and you're able to buy goods pretty cheap because of like how low the value of the yen is relative to the US dollar. Like if I go there and I go to a restaurant or if I go buy some matcha, it's so cheap because of how devalued the yen is relative to the US dollar. That is like the exact perspective for a heavy infrastructure, industrial, PE oriented player. Like if I am investing in a cheap but growing economy like Japan, I don't want to call it cheap, but like relative wise, lowered value valuation country relative to the US, that same principle applies. I can buy equipment, I can buy heavy machinery, I can buy all types of things. So like if the best play if I'm a private equity player, Chris, is I'm going to have US operations, maybe like supply chain stuff and big heavy machinery, but I'm going to procure that stuff by buying Japanese yen denominated goods, heavy machinery, and I can lower sort of like my capex basis. I can lower my cost basis, all kinds of things. Maybe even lower my cost basis on the talent side because the wages might be lower. And if your entire cost and capex basis is yen denominated, and it's a lot cheaper than the US, then of course, and I'm generating revenue in the US, that's banger. You know what I'm saying? Is Destiny's thinking of buying a condo in Thailand or the Philippines since it's insanely affordable over there? Heck yeah. Shout out to the Pinoys. Pinoys. Shout out to the Filipinos. I'm I'm actually like a quarter Filipino. My grandma's Filipino, guys. I don't know if you guys ever see the video with my grandma finance popping in, but shout out to all the Filipinos in the world. One day I'm gonna have a cooking stream where I cook some Filipino food for chat. I'll show you guys how to make some pancit and chicken adobo, all that jazz. Funny enough, when me and Eric were in college, we used to like have like cooking nights every other month or so, and we would always make like Filipino food and other cuisines. But shout out to the Pinoys. But hopefully that makes sense, Chris. It's literally just like going to Japan and buying matcha because it's so cheap. Imagine being a big private equity firm and going to Japan and buying heavy production and machinery because it's that cheap. You know? So that's the play there. Why China when they're going to be tariff to hell, go to Vietnam? That is so true, Zestiny. That is so dang true, right? Like China's going through so much with the US, and it's like China. Oh wait, hey Power, don't spoil anything. I didn't finish Jujutsu Kaisen, by the way. No spoilers in the chat. No spoilers in the chat. So I'm not gonna read your thing. I didn't see what you wrote, but I saw Sukuna, and I was like, oh, don't spoil it. But back to your question, Destiny. It's like I think the next logical places to operate and produce, especially on like consumer goods and apparel and chips and tech, is Vietnam, Thailand. Philippines just doesn't have the infrastructure yet, and like the logistics infrastructure of like getting goods in and out at crazy high volumes. Like that's what you have to think about. India. Oh, Richard. Yeah. India is insane. Like there's so much going on in India. I think people are sleeping on India's economy. India's economy is massive, and the talent there is incredible. Like low key, a lot of tech companies, and one of the companies we owned back in KKR, like they have been making such a play on having tech oriented businesses by hiring Indian labor, like Indian software developers, graphic designers. They are so talented. They are so good. Like in terms of like a global workforce, like Indian software development, engineering, computer science talent is like next freaking level. It's so impressive. And it's like a tenth of the price of the US engineers. It's crazy. Like it's to be a US software developer, it is tough. Like your value proposition has to be legit. You know what I'm saying? Like it's crazy. Like if I'm graduating, like say for excuse me. Say for example, I am Noah's age and I just graduated college and I'm doing a first year job, right? And I was a software engineer. I would probably expect like 150,000 salary, and my skills are not that advanced yet. I got to compete with two things. I got to compete with almost free AI, but then I also have to compete with a software engineer in India that's $20,000 to $30,000 a year for a business. Like, you know how crazy that is? I got to be him or her in order to do it. And yeah, Zestin, you're exactly right. They have an abundance of cheap, high-skilled labor. Like, emphasis on the high-skilled. I don't know what they're doing in the universities out there, but it's like insane. And I'm playing into this too. Like for the businesses that we're acquiring, one of them is in Florida, and like there's some pieces of the workflow that some of the US team in Florida is doing that they don't need to be doing. Like in my opinion, the best setup for the business that I acquire is that we have in US, in terms of US team members, they are focused on high revenue generating activities or customer facing activities, right? But in terms of like engineering, design, software development, drafting, CAD design, anything that's just like a simple deliverable that needs to get done and accurate, I'm hoping AI can do it, or we can have a team overseas do it for a tenth of the price to improve margins. You know? And I like that thesis because we're not displacing US labor, we're reallocating it. I'm not a big proponent of firing US people and hiring overseas people. I'm a US guy, right? I am a big proponent of taking US people, getting rid of the to-do list that is not high revenue generating, training them up to work on higher valued skills, and then some of the other items that still needs to get done, leveraging overseas amazing talent and providing economic opportunities for those people. That's the best of both worlds. So you don't fire anyone, you just reallocate resources and bring in someone else that is more efficient and better and cheaper. I was born in India and moved to the US, so literally what you said is spot on. Holy crap, thanks, Chris. That's a good data point right there. But what's amazing though is I'm bullish on India's economy. Like if I were to have $1 billion, you bet your butt that I'm gonna have like Indian private equity exposure, Indian real estate exposure. Why? Because more and more businesses are understanding that trade of have US revenue, but an Indian cost basis. Straight cash margins, right? But thinking a second and third level deeper is that Indian cost basis is that we are creating economic opportunities that didn't otherwise exist in India, right? Like you are now starting to see graduates of top Indian universities being able to work for a Google, for Accenture, for a Blackstone, for like all these different places. So now you're seeing the rise of the Indian middle class. And we see a rise of a massive middle class in like a country like India. They're spending more on goods, they're spending more on food, they're buying homes for their families, they're spending on all types of services for their families. It's a lot going on. Now, granted, Chris, you might be more smarter than me in this, but it depends on where within India. I think you need to be in specific regions and specific like cities and areas. Not all of it will probably be a good play, but it's like there's a growing middle class that's like actually starting to thrive. So like the two countries like emerging wise that I'm very bullish on, India and the Philippines, because the Philippines is also having a massive middle class growth. Like the growth in the middle class in the Philippines is insane right now, largely driven by business process outsourcing. Mainly like lots of call center stuff, a lot of tech support stuff, but it's creating crazy economic upside for families and middle income Filipinos. Chris said, to be honest, it really depends on the side of India. Yeah, you're right. Infrastructure in South India is much more advanced for tech and investment. Chris, if I were to visit India for a week, I want to go. I've never been. Where should I go? Like, what's like the number one place that I should go visit in India? Business games is limitless. Richard, this is Smart Money Moves. This is Market Mondays. Isn't business so freaking cool? Like there's so much going on, bro. Richard, you said Kerala. What's Kerala? Hey, we're about to get a Smart Money tour going. Hey, someone get me a Starlink so we can travel and get this on stream. This is so beautiful. What the heck? This is like the Laguna of India. This literally is like the Laguna of India. Look at this. This looks just like... You can't tell me this ain't the same as this. Kerala, India is just like Laguna Beach, California. That's lit. That's lit. Richard, how you know about this place? You been here? This is so nice. Oh, hey, Boogie's in the chat. Hey, Boogie, what up, twin? How you doing, dog? We out here making smart money moves for the shred lords, and lordesses. You traveling? Yeah, man, finding boring businesses everywhere. No, we just talking about like emerging economies. We talked about Japan's economy, Boogie. Then we talked about the sort of like yen trade, and then we started talking about like other places to produce, so like Philippines and all kinds of stuff. So now we're on to India, and I just gave my thesis on like why I think India is the dopest middle class in the world, and why it's like a big thesis. W Boogie, W Boogie. Why do I think you guys are fans of boogies more than me? This has now become the Kenny and Boogie Finance channel. No, that's my dog though. All right, so Chris, you say I think first for tech is Bangalore, and then if you want tropical Kerala, for historical do Delhi. Okay. Okay, this is good. This is really good. I gotta write this stuff down. This is so good. This is so good. I think they're relieved that you joined, Boogie. It's like, were you not entertained? JK, we got to get you on stream, Bugs. I'm gonna come up there this weekend probably. I'm gonna come up there. We're gonna do like an in-person IRL. Oh, Boogie, you see I added the overlays. Check out the overlay. You see the overlays? How's it look? We got the sub count on the left. We got my big old head. The chat's a little bit more readable, and I kept it on here so you guys can see what everybody's saying. And as you can see, everybody going crazy, crazy W Boogie, W Boogie. And then we got Chat Capital AUM, y'all. Chat Capital AUM. Hey, what's crazy is we started Chat Capital a week ago. You know that? Or like a week and a half ago. And we already at 350. We haven't even invested it yet. So once we start investing it, that's about to be nuts. That's about to be nuts. And Boogie, I was telling them, nobody believed in you. Like nobody believed in Echo Star. And if we were to look at the last few days, I'm just saying, y'all. When Boogie proposes an idea, he's just not no Joe Blow at the barbershop. That boy Boogie ain't no Joe Blow at the barbershop talking about what he heard in an Uber. You know what I'm saying? Oh, W Boogie.
W overlay.
Yes, sir. Boogie donated more to the chat. Oh, snap. Hey, y'all see how that worked? Hey, that's a W. You see that? Oh, that's so cool. Literally, when you donated it, it increased it. Wait, that's so freaking cool, y'all. So, y'all ain't believing Boogie, man. He ain't no Joe Blow at the barbershop, you know, talking about what he heard at the bodega. Nah, that boy Boogie's a pro. He's a pro. He works at one of the best private equity firms in the entire world. And he's sitting here in the chat with us. Isn't that crispy? And he just showed us that our animations work. W Boogie. I keep telling y'all, it's like, this is revolutionary for, I think, the world of content. It's like my streams, the community we're going to be bringing on, the deal team, we're going to talk about that later, like next week or something. But it's just like the access you guys are going to get are just like, I'm convincing all my homies and friends that are just like dogs in the world to just like hop on this dang stream and ungatekeep like smart money moves. You know what I'm saying? Like, we got so much stuff cooking though. Starting with Boogie. I don't think it worked, Boog. I think you got to put another 50 in. Low key though. Chat, I don't think it worked. I think it's a glitch. Oh, wait, Boogie, low key, for real though. And if you guys haven't already, hit that like button and sub up. I don't know what y'all doing. But Boogie, there's a guy in here, Noah. Noah is a first-year analyst in PE in New York. Or like PE investment. I forgot what's in PE. But give him some drop some bars, drop some career advice. I can see it now. I can't. But give Noah some career advice, Books. First year in New York. Like if me and you were to go back years ago to our first year ever in New York City, what would you do? How would you move? What's like the play? And wait, while you're doing this, let me I'm gonna turn off this Streamlabs cloud bot. Let me manage this for you. I'm gonna get this off so there's no typing limits on here. I'm gonna do off. All right, I turned my chat bot off. Y'all can say whatever y'all want now. Just don't be racist. Boogie, drop some wisdom. Or put another 100. Anywho, this is like a very beautiful setup. So this is Laguna Beach. But then Kerala is nice too. He donated on our behalf. Boogie's the largest LP. Chat capital. We were talking about Japan birth rates. Boom. Here's another great read from Britannica. It just kind of gives the history of the Japanese economy. What we can do is take this whole thing. Boogie, I need to learn from you. I'm saying, man, y'all better lock in, man. This dude's the #1 investor in the game, chat. Private investor. Smart money moves. You know what's funny? He's the one that actually told me to make a YouTube channel. Sensi Code Live, what's up? Welcome to the channel. Welcome to the fam. I appreciate you subbing up. Hey, yo, low key, we learned so much today. Wait, I'm actually like, my brain's kind of like on fire right now. We learned about Japan's economy. We learned about India's middle class. We found a cool vacation spot in India. We also learned about what's happening with Chevron. This is sick. We're learning so much. And what's also really cool, guys, is like literally this kind of knowledge compounds. Like if we learn every day like this, we're about to be such shredlords. W stream. Hey, thanks guys. I appreciate that. OMG. AO Powered or it was Nadal or something like that. Did you watch Hunter x Hunter? Boy, let me tell you something. Hunter x Hunter is one of the greatest anime of all time. That's my top 3. That is literally, I would die on that hill. That is one of my top 3 anime of all time. Like if I like my lifestyle is so like gone. It's like it's so like gone. Like I'm young, I'm goofy, I'm like very naive, and it's just like but I got that dog in me when I need to. You know what I'm saying? And then what's funny is if you see my friends like Eric or Boogie, you can see that they are literally like emos. They're so dark. They're like the biggest pains in the butt. They're loving and great supportive friends, but they're just absolute a-holes sometimes, and they're just like Killua. They're just like Killua. It's so funny. It's so funny, but I love Hunter x Hunter. I watched the whole thing like twice. Literally watched the whole thing like twice. Yeah, bro, rich topic. It's one of those things too, where it's like, it's so many episodes that like, it's so peaceful. Like, it's just like so peaceful. Oh, I love you, man. I love you too, dude. I love everybody here. But rich topic is one of those things where it's just like so dang peaceful and relaxing that like, it just gives you like so much, I don't know, it just makes you feel like it's not an intense watch. Like Jujutsu Kaisen, you gotta mentally be ready for like some dog fights, you know, and just crazy arcs. Whereas Hunter x Hunter is kind of just like you just literally going through the Hunter exam with the kid, you know, and just like trying to find your dad type stuff. You know what I'm saying? It's like that good. It's like that good. Oh snap! Noah, thank you for that. The most interactive stream you've ever been on. Hey, I appreciate that. That's our design. Zestiny, where's Full Metal Alchemist? Okay. Let's be honest here. So this right here, everyone that I've seen everyone that has told me that has watched it has said that it is top 5 dog. Me? I haven't watched it yet. I haven't watched it. I'm sorry. Zestiny, I'm so sorry. I'm so sorry, Chief. I just haven't watched it. I'm just so sorry. I gotta find a way to just like lock in and what I want to, but it's like I pick my battles. Like I pick my battles in terms of like which like long ones I can tap into. Like One Piece, haven't even started it. Because that is a life commitment right there. All those episodes, I gotta commit to it. Full Metal Alchemist, I think they have a bunch of episodes. I gotta really commit to it. Watch Brotherhood. Wait, which one? Full Metal Alchemist Brotherhood? Boogie, you seen that? Oh, y'all want to see Boogie's favorite anime? This boy was literally crying when we were watching this. Literally crying his eyes out. What was it? He was watching he was watching let me see. When we watch, oh, here we go. This right here, this is top 5. This is top 5. This is top 5. This show is so freaking elite, yo. This show is so, this boy right here, he is such a dog. Hey, hey, Destiny, she get it. Hey, you're hip, Destiny. But I have no enemies. What y'all know about that, huh? That's low key. That's elite ball knowledge right there. That is elite ball knowledge. But I was at Boogie Crib the other day. We watched this. This was so dang good. Season one is kind of just like it makes you face the trauma. You know what I'm saying? It makes you face the dark stuff that you gotta, go through. But season 2, you really grow up. No BS, chat. You really grow up. If you haven't seen this, like oh my God, you need to watch this. Oh wait, hold on, Windbreaker. Hold on. Y'all putting some new Rex in here? Hey, drop Rex in the chat. Oh no. Hold on, this low key look lit. What's it about? Windbreaker. Anybody seen this? Like homeboy just look like he get active. You know what I'm saying? Like, he did look like he get active. But I gotta get hip to all of these. Boogie says Kenny like Tatsumi. He always fumbling the baddies. Yeah, you're right. I ain't gonna hold y'all up. I had so many baddies in my life and I fumbled. Why? Because I chose to grind. I chose to build. I put my head down and I was locked, Boogie. All right? But then there are some where it's just like, dang, I could have handled it better. Oh my goodness, Rich. Akami got killed. That was like, I think my 3rd or 4th anime I've ever watched. Y'all, this show was so dang good. This is so good. It is like incredible. The action, the storytelling, the guy just literally just being him and having literally like baddies falling all over. Like it was so good. It's so good. This is a top 10 for sure. Her right here. She's a for lifer, right? I'm just saying, like, she built for this. But did I finish this? I don't know if I finished. I gotta ask Eric. Eric literally has a what's funny? Eric has a tracker of all the anime that I watch. Because Eric put me on this when I was freshman in college. We were roommates all throughout college, and like our first year of college, he's like, you got to start watching anime. So he started me with High School of Dead. I don't recommend that as the first one for anyone else. It's just like all boobs. But he put me on to that. And then he put me on Terraformers and then Attack on Titan and then other stuff as well. But he has a tracker of all the anime that I'm supposed to watch. And he measures my progress because he's like, you never finish anything. You watch all these things and literally never finish it. Literally. Hey, W Boogie in the chat. I appreciate you tapping in, legend. Go handle the business and then come back and donate more for chat capital. Good purpose. I totally missed the gym too, guys. But I'm having a lot more fun than this. I'm gonna go to the home gym. Wait, did you like Attack on Titan? I actually did. I didn't finish though. I'm not done yet. But what I watched so far, I like. Like I love it. It's really good. I think it's really good. I see the thing is though, I get so busy with so many things that I'm doing that it's just like I watch it and then I get busy and I'm traveling and doing all kinds of things and I just forget to come back to it and then I find a new show and then it's like, all right, it just compounds. It just I really mess up with that. I gotta have better discipline though, watching my shows. I definitely gotta have better discipline. Moriarty the Patriot. Hey, Power, you got so many amazing ideas. I'm gonna add you to the Google sheet that Eric made for me so that you can add too. Because I feel like you have better ideas than Eric. Whoa. Let's hear the synopsis. What they talking about? It focuses on Holmes' nemesis. Okay. Manga series, boom. Reimagines the world of Sherlock Holmes. Oh, interesting. From the perspective of his nemesis, Professor Moriarty, as a crime consultant fighting class inequality in Victorian England. Woo. Low key. I might gotta watch this, y'all. Low key, low key. So many awesome things. But yeah, Boogie's right. I fumbled a lot of baddies because I was focused on my grind. The grind chose me. Don't worry though. I'm gonna get social again this year. So put myself back out there. But in terms of the market, y'all, I want y'all to pay attention to what happens in Japan overnight. It might have some implications in the U.S. market, not that much, but I think the big topics next week on the markets is going to be, of course, Japan. It's going to be what's happening in U.S. What's happening, not U.S. like consumer. The oil markets, I think it's going to evolve week to week, but not a crazy needle moving thing. And we gotta vote on some of these stocks that we put. So, EcoStar, we might have to revisit this vote. Oh, wait, you gotta watch Steins Gate. It's a bit old, but it's good. Ooh, what's Steins Gate? Oh, it looked like it got that old animation style. Wait, these are such good ideas, y'all. I'm gonna write these down so I don't forget. Steins. Made in Abyss. What else? Someone else. Oh, Full Metal. I gotta watch all these. I'm just pasting it here, but I'm gonna send it to myself afterwards. I gotta see all these though. Y'all really the ghosts for that. Getting me all these insights. I appreciate y'all. Give me all these insights. If you love time travel shows, you're gonna love it. It's really executed well. I appreciate that. For platforms, do I like Webull? I think Webull could be cool. So the platforms that I'm thinking about, Webull, Robinhood, Betterment, and then maybe one of the boring ones. Because the thing is, the key is they're gonna give us a bunch of perks for like using them, right? Because they're gonna be like a sponsor partner. You're gonna see like their logo like on the stream somewhere here, like as we do our streams. Like there's gonna be a whole setup like that probably. But as this stream grows and our community grows, we're gonna have a lot of folks sign up for things that they see chat using, right? And like as a steward of our community, I want to make sure that we do the right thing. That's a smart money decision. The worst thing that could happen is someone comes on stream, see us making smart money investment decisions, value-oriented investing, and we're sponsored by blank brokerage. But then they sign up for own blank brokerage, and when they're using it personally, they're bombarded with a bunch of day trading stuff, a bunch of crazy wild crypto meme coins, a bunch of other things that are just like outside of my influence, really bad habits. That I don't want to do. I don't want to do anything that is likely going to encourage bad financial decisions. So like I would love to find a marquee anchor platform that is just like a thoroughbred smart money platform, right? right? Like Robin just doesn't give you enough information. Like that's like, it's just like we want more information. You know what I'm saying? Um, and there's probably some platforms that are just like really useful that don't encourage crazy bad addictive trading habits. And like I want to make sure we make the best decision for you guys because I don't want you all building bad habits just because of how easy it is to gamify investing. Oh, Ninja Trader, that's good. That sounds good. So I gotta check that out. But like any platform that we can just like put our dollars in, that we have this $405 to the account and just like buy these equities and hold it for a long time. For a disclaimer, I actually like how I buy my stocks now is through my wealth manager at Morgan Stanley. I don't know if he's gonna make me like a chat capital version, but that's where I do most of my stuff. But I'm down to open up an account for one of these like smaller ones just for chat capital purposes. So this week I'm gonna reach out to a few, have some conversations to see who could be a cool partner. Because it'd be cool to like sponsor events and everything. Like I want to have a big mega national stock picks competition where it's like we have people from all over the world compete for prizes to pitch us some of the best stocks. And they got to hop on stream and pitch us a stock and show us the deck and show us their diligence. Like that'll be really cool to see. And I'll have like me being a judge and some of my hedge fund friends being judges. Like that'll be really cool. And then we give a prize to whoever gets the best idea. Like that'll be really dope. So we're lining up a sponsor for that kind of project. And then, yeah, other stuff like that will be pretty dope. But we got a lot of amazing friggin' things on the horizon now. Like so many dope things on the horizon. But y'all, we learned so much today. We learned so much today. And I'm geeked. So tomorrow we got even more stuff to react to. And I got to actually run to the gym, guys, because it closes in like 40 minutes. I got to run to the gym, get some fitness in. Smart money moves start with a smart body and a smart mind. All right, guys? But I want to make a few shout outs. Shout out to everyone that gave me amazing anime recs. I'm going to act on those tonight. I actually might watch some while I'm on the treadmill, so I'm at the gym today. Shout out to Noah for starting his new job in New York in finance. Shout out to Rich and Richard for having amazing businesses and taking the things that we talk about on stream and implementing them. Shout out to, Promised Netherlands is actually a really good one. I'll watch that. Shout out to Edwin for the amazing nudge for us to learn about oil today and the thesis that we're building on Chevron. So that was super helpful. Zestiny giving us amazing intel of what's happening across like Thailand's markets. Folks giving us insight into Japan. Like we learned so much today. So Chris for giving us the expert point of views of what's happening in India. Like, look, you don't get this anywhere else. This is Harvard Business School on stream, y'all. So W stream, this was a bunch of fun. Hopefully you guys like the new overlays. I'm gonna be back tomorrow, probably around 6 or 6:30 PT. I'm gonna have a lot more stuff to talk about and learn, but I'm gonna hop out. I'm gonna go vibe. But if you guys want to learn more stuff, go check out my YouTube videos. But as always, bang that like button, sub up if you haven't. I don't know what y'all doing if you haven't subbed up. And let's keep making these smart money moves and send this stuff literally to the moon. You're going to see this little chat AUM, $405. That's literally going to go from $405 to $400,000 very soon. Very soon. All right, y'all. Let's keep rocking. I appreciate y'all. Love y'all. And I will catch you guys on the next stream. As always, take care of yourselves. Take care of each other. And I'll catch you guys. Make smart money moves on the next one. See ya.